Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a really exciting one for you. We're going to be talking about Hut 8 mining. This is currently one of my favorite crypto mining plays in the entire market, and we're actually joined by a special guest today, none other than Sue Ennis, who's the VP of Corporate Development at Hut 8. Now before we get into it, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below what you think of this style of video, if you're currently holding shares of Hut 8 mining, and if you have any additional questions that we can follow up on in our next Q&A session. Now with that being said, let's get into today's video. Okay guys, thanks so much for joining us today. We've got a really exciting one. We're going to be discussing Hut 8 mining. As many of you know, this is one of the most well-covered companies on my channel. I'm also a major investor. This is one of my biggest personal positions. So I'm super excited about today's video because we're joined in office by the VP of Corporate Development from Hut 8 mining, none other than Sue Ennis. So Sue, thanks so much for being with us today. Really looking forward to talking with you.
Thank you so much for having me on. Huge fan of your channel, huge fan of your audience. And yeah, happy to get into it today about what the latest and greatest with Hut 8.
Perfect. So we've got about 10 questions we'll go through today. Some of these are actually from viewers, which is really exciting. Some of them I've put together myself. So for the first one, Sue, for people who maybe aren't familiar with your company, crypto mining space in general, can you tell us about Hut 8 mining, your business model, and what kind of differentiates you from some of the other players in this space?
Yeah, absolutely. So Hut 8, we're one of the oldest and largest publicly traded Bitcoin miners in the world. We've been mining Bitcoin since late 2017. And we also have one of the highest amounts of self-mined Bitcoin on the balance sheet. So last time we reported, we have a little over 7,000 Bitcoin held on our balance sheet. The stack is not encumbered. And I think what really matters about Hut 8 and differentiates us is, number one, being the oldest means that this isn't our first rodeo in terms of the bear market. We've already been through, learned and survived and thrived through two different bear markets. And what we've learned through the bear markets actually is what has set us up for success in now this current bear market. So things like taking a balance sheet first approach to everything that we do. So while a lot of our new competitors into the market last year in last year's bull market were spending crazy prices on machines that they now can't afford and might have to sell, Hut 8 was being very conservative about what price we paid and when we paid it. Some of our miners have also had to start to sell the Bitcoin that they have mined at, again, rock bottom prices right now. And the reason why I had to do that is because we've really focused on prioritizing how many different, and a philosophy of basically saying, okay, how many different lines of fiat US dollar based revenue can we build on the side so that we can continue to mine Bitcoin, hodl, keep the lights on, but also put our stake in the sand and like where this entire blockchain and Bitcoin industry is going. It doesn't just start and stop at mine and hodl. The Web3, layer 2, layer 1 alts, the amount of adoption that we're seeing, even in just gaming alone, there is a real opportunity that we have now taken to now start building out infrastructure that is scaling with how this industry is growing. Because again, at the end of the day, we look at ourselves as infrastructure engineers, right? At the end of the day, Bitcoin mining is just data infrastructure that spits out a high performance compute piece, and that's Bitcoin. So, so we have differentiated ourselves by in January, we bought 5 data centers across Canada. And they're traditional data centers that we're basically upgrading in the excess capacity with infrastructure to serve the Web3 space. We can get into it. But my point is, this deal came with no debt, came with 400 existing enterprise customers. It's a $19 million trailing revenue business. And these 400 customers are in an industry, it's sticky, recurring revenue, subscription-based, in an industry that is completely uncorrelated to digital asset mining. So again, that's what really differentiates Hut 8 is that we have a very diversified strategy so that we can stay agile and pivot and not let the market drive us, but instead drive in this market. So that's Hut 8 in a nutshell.
Awesome. Well, that works. That's a great intro. And yeah, that data center acquisition, we've talked about it on the channel. So if you missed those videos, I would encourage you to go back and take a look. But to me, that's really one of the key things here is you've got multiple revenue streams that allow you to keep the lights on when Bitcoin maybe isn't as great as it used to be. And then the hold on for dear life strategy you mentioned in your response there as well. We're going to get into that a little bit later. I've got some follow-up questions, but I think that's another one. I believe you're now holding over 7,000 Bitcoin or something based on your last monthly production update, which is phenomenal. And I think one of the biggest self-held reserves or self-mined reserves of any company. Is that right?
Yeah, absolutely. And as per publicly available filings right now, we're the only ones who haven't sold this year.
Yeah, phenomenal. Yeah, and that's really a testament, I think, to some of that other diversified revenue that we just talked about there. And while we're on the topic, I don't know what you can share here, Sue, but are there other opportunities you guys are exploring in the M&A space right now, or are you kind of just being pretty selective there?
I mean, we're being extremely selective, but because we managed our balance sheet so well last year, we're in a perfect position to go shopping this year. And we do think that we are going to see quite a few people lose their shirt in this bear market.
Yeah.
As I mentioned, a lot of different companies who hadn't operated in this space before and came in a bull market paid a little bit too much. There's still supply chain constraints on, certain pieces of what it takes to set up a mine. Energy prices are at all-time high. We're currently in Texas. There's a heat wave in Texas. So a lot of miners have been forced to shut down operations to give power back to the grid, which is also a benefit, which is what's so incredible about Bitcoin mining. Bitcoin mining is truly a complement to renewable energy operators, actually does help fortify grids, but we can get into that later if we feel like it. So that's my long-winded answer of basically saying, yeah, Hut 8, we're in a great position, and very confident about, sort of potentially some of the bargains we can pick up in this market.
For sure. And yeah, we can get into the energy stuff. I did see you guys tapered off a bit of production at the Drumheller location. We're seeing energy prices everywhere go up. That, again, to me, kind of seems like an opportunity. You guys have a lot of your newest and greatest equipment out east where you've got the secured contracts. What's the plan for Drumheller here over the next couple of months? Just monitor the prices and see how it goes, or?
Yeah, I think so. I mean, this third site that we've stood up in North Bay has up to 100 megawatts of power, and we now have 15 megawatts in production.
Okay.
Some of our GPU miners, where we're mining Ethereum but getting paid out in Bitcoin at less than $3,500 Canadian per coin, are going to go into our new data centers. So when there's not a Web3 customer using our compute, we'll just flip the GPUs back on and mine out of there. So I don't quite know if I have any intel for you on the Drumheller site, except that, we're really playing a lot of Jenga right now and Tetris, because there's so many different ways that we can increase efficiency, given how we now have 8 data centers. If we're counting mining as data, we've got 8 across Canada, which gives us a ton of flexibility about what miners go where, how do we maximize efficiency if prices are peaking. So
yeah, great. Yeah, the flexibility is really something that catches my eye here. So the next question, this is actually from a number of viewers. Obviously, we've seen a major pullback in the price of Bitcoin. It's flirting around kind of 30,000 US now, down from highs we saw last year. I've been reading a lot of articles, and I have a couple of questions here for you. So some people obviously at face value are saying, oh my God, the reserve is worth way less. Your share price has dropped tremendously. I'm looking at this kind of from another way. You mentioned your hold on for dear life strategy. So realistically, if we woke up today and Bitcoin was 35 or 45 or 55,000, I don't think it would fundamentally change your guys' game plan there. You're holding these Bitcoin for the long run. But it is, in my opinion, presenting some cool opportunities. And you kind of alluded to that, whether you can buy things on sale or whether it's just taking the attention off the space. There's less new people coming in. Just kind of calms the waters a little bit so you can focus on your business. So can you talk to us a little bit about that situation?
Yeah, absolutely. So I think, look, let's address the bear market first. Okay. Yeah. So we were alive in 2018, which was obviously a bear market for Bitcoin. Mm-hmm. It's so different, this bear market versus last bear market. 2018's bear market was a loss of belief in Bitcoin and a loss of belief in the technology.
Yeah.
Today's bear market is based on macro factors. So it's not just Bitcoin that's down, it's the Netflixes, the Shopify's, that any company that needs any sort of capital to continue to grow is selling off because of the rates rising and the availability of cheap credit is drying up.
Yeah.
So really big deal when a reason an industry is down is macro driven and not a loss of confidence. So that's huge.
Yeah.
And again, that's why if you look at some of the fundamentals about like what's changed since 2018 from an adoption perspective, from a regulation perspective, from an institutional participation perspective, from a development and dev activity, not only on Bitcoin and Ethereum, but the blockchain gaming space, Solana, Polygon. So things are so much different now, and that's why we think this justifies a hodl. The amount of adoption, whether it be an institution or a pension plan using Bitcoin in the alt sleeve, a hedge fund using it in their VC sleeve, or the true utility of people in Argentina and Venezuela using it as an alternative to a melting fiat and autocratic rule. There's just so much upside that's happening here.
Yeah.
So,
and not to mention all the development at the company itself. So you're talking macro scale here, but just looking at HUD 8 over the last 12 months, the hash rate you guys have, the new businesses you've bolted on, the development of the company itself, when you look at the share price is quite astonishing as well. Yeah.
And so point is, we certainly think that this is macro driven, uncertainty, or I don't know what else to call it really, but
like headwinds basically.
Yeah, it's a lot in 2018. And again, this sort of Web3 infrastructure piece of our business, on top of being a diversification strategy and an uncorrelated sticky revenue, we really look at it as Amazon Web Services back in the day when it was trading for like $9. Like Web3 isn't really here yet, but this is where the internet is going. This is where the paradigm of how people use, how businesses build on the internet is going. And all of these projects need what Web 2 needs, aka disaster recovery, infrastructure, digital render. And that's what we've now built, because that piece of the industry is being deeply underserved by traditional data center REITs because they don't understand Web 3. Oftentimes they'll charge crazy projects when sometimes a blockchain gaming developer just needs 72 hours of compute, because Amazon Web and Equinix and switches of the world have a monopoly on the market. They can charge them and basically gouge them crazy prices. So look, HUD 8, we just see a tremendous amount of growth, and macro events like what's happening right now is when you put your head down and you build. Yeah. Bear markets to build. DeFi and NFTs were born in the last bear market. So we see this opportunity. We see this as an opportunity to build and then come out guns a-blazing when the bull market's back.
Awesome. Okay, great. So the next question, you talked a little bit about this. So I think last month it was 14%, but on average it's about 15% of your production of Bitcoin is actually Ethereum mining that you guys then convert. And the benefit there is it's a lot more efficient, a lot cheaper to mine. You mentioned, I think, about $3,500 per Bitcoin after conversion, which is well below the industry average by far. So this is another viewer question. How is the shift to Ethereum 2.0 and moving from proof of work to proof of stake going to impact that 15% of your operations each month?
Yeah, it's a great question. So we bought basically the Ferrari of GPU miners from NVIDIA last year. And the thinking there was twofold. So number one, it was, we found a better way at a lower power footprint to get more Bitcoin on our balance sheet at a crazy price point. But also, we knew that we wanted to start building out this sort of composable infrastructure for Web3 compute and traditional Web 2 customers. And we were able to do that also. These GPUs were a complement to that strategy because the server can be repurposed to machine learning and AI and other high performance computing activities. But point is, so we basically bought these Ferrari of GPUs, and I call them that because it was a limited fleet that NVIDIA came out with. We're actually not even legally allowed to say like what the model was, because we were only one of 3 customers globally to get this inventory. And so effectively what that means is that if Ethereum were to go to proof of stake tomorrow morning, we could easily just pivot and mine the next most profitable proof of work GPU based coin. We do not think that all that hash rate that's currently dedicated to ETH proof of work is going to die because it goes to proof of stake. We think it's going to move to the next most profitable GPU-based proof of work network. And if you look at what, for example, the price of Ethereum Classic has been doing, Ethereum Classic has been holding its own.
Yeah.
If you look, and based on what sort of our analysts are saying, is it's because there is an anticipation that hash rate is going to go and start mining that chain, and there's going to become demand for these alt chains. So look, we can easily pivot to the next most profitable proof of work GPU based network, and because it's the Ferraris, that's not going to be difficult for us to do. We also have a phenomenal partnership with Luxor Mining Pool.
Yeah.
So they have there where you can basically just donate your hash, and they decide where's the most profitable network and at what time, and then spit out whatever output you want. In this case, it would be Bitcoin for us. So we feel really well positioned to continue to make sure that this equipment's efficient.
Okay, great. So yeah, it can be repurposed quite easily, it sounds like. And another question that came up from a viewer is just, are there other coins you would explore? And it sounds like the answer to that is yes, whatever's the most profitable at the time. Okay, great. So shifting back then to the HODL strategy, hold on for dear life strategy. This was my own question I was curious about. At what point would Hut 8 consider selling Bitcoin?
I mean, look, I think if Bitcoin were to hit 100 grand, to hit 144,000, like JP Morgan said 2 years ago, we would certainly reevaluate that use case, right? I mean, if it was sell Bitcoin so that we could fund more growth on our super high margin HPC Web3 business, yeah, maybe.
Yeah.
But I can tell you internally, we don't really have a price point in mind, because it's sort of a wait and see, and also look at sort of, do we need to sell? Because we don't, because we're so balance sheet focused, and because we have a business now that's paying us sticky recurring cash based revenue. Like, we don't need to sell right now, and maybe not ever. I mean, who knows? There's also a really interesting use case to think about: continuing to mine, continuing to HODL, and then really putting that stack to work. Like, there's a lot you can do in a yield program, or with some really sophisticated derivative strategies to put that Bitcoin to work, right? The same way that you would invest cash, instead of leaving it in a money market account, you can certainly earn some interest in different areas. So we see a lot of just flexibility that we have with this HODL strategy and our balance sheet first approach.
For sure. And it may be a little bit premature for this, but would you see that like flowing into a dividend type thing for the stock or for shareholders, or is it a little bit too premature?
I can't publicly confirm or give any guidance that hasn't become publicly available, but I can certainly confirm that we are looking at all options because we're in a place where we can, if that makes any sense.
It does make sense, and appreciate the transparency there. Okay, so this is another super hot topic on the channel in a number of different video comments. So the Bitcoin halving events, I think the next one is scheduled for 2024. Obviously, that's where the rate of Bitcoin that's mined on the chain is cut in half or decreased. How is that going to impact the operations? And do you see that as an opportunity or a potential challenge for the company?
Yeah, well, I think, hash rate isn't at all-time highs. It's only a couple percent below all-time highs. I think we're at 210 trillion terahash per second at the moment. So, I mean, I think it's certainly going to be interesting to see if hash rate continues to hit all-time highs, if the competition, which means obviously more people are mining the network, competition has increased. It certainly reduces the margins and the output for all of us across the board, right? Because the reward goes from 6.25 to 3.15, I believe. Mm-hmm. Or 3.125. So, but you still need miners mining the network. There's still transaction fees that you can earn. There's still opportunity there, but I think that's why, again, really focusing on what are the high growth, high barriers to competitive entry that are coming up because of the maturation and development and adoption of this technology. That's sort of how we're looking at it. Because there certainly will be challenges to maintaining a thriving business for all miners, because it's technically a declining margin business, right? It's declining.
Yeah.
So, but versus infrastructure and providing that support for the growing Web3 ecosystem is exploding, and there's very high barriers to competitive entry. So again, we're pioneers in infrastructure. We were one of the first guys to start mining Bitcoin, and now we're one of the first guys to say, okay, love Bitcoin mining. That's been a trip. That's been a ride. But like, what's next? Like, where's the puck going? And this is where it's going, in our opinion.
Yeah, for sure. Okay, great answer. And for the viewers, what are some upcoming catalysts to watch for? I know you've talked about a few of them throughout the presentation, but anything specific dates, events that should be on our radar?
Yeah, I think no specific dates or events, but I think, we're obviously going to a bunch of conferences, but I think that I'm really looking forward to updating you guys with our plans for, this tremendous stack that we have that we're not selling. I'm really looking forward to updating you guys about some of the new projects that we're signing, where there's some really cool projects that have come to us saying, oh my God, please help me. I need your storage. I need your disaster recovery. I need your digital render. We signed a partnership with EGLX, one of the largest gaming companies in the world. They have over 300 million gamers, are owners of Luminosity and Addicting Games, and their blockchain game EV.io is going to be running on our infrastructure. So we're just really pumped to actually show you tangible examples of how significant this new infrastructure is, and how significant and the need for what we're providing to the marketplace. So we're just really pumped to keep you updated on how that's going, and those margins and growth.
Amazing. Yeah, we look forward to hearing it and hopefully having you back on the channel. So closing question here for you, Sue. Where can people go to get more information?
Yeah, so hut8mining.com. On Twitter, my name is @BigSuey, @BIGSUEY.
Okay.
Please shoot me a note if you want to chat. Happy to chat anytime, DM me. And otherwise, just stay tuned.
Great. And I'll leave a link in the video description to the company website and the information you provided there. So thanks so much for being with us today, getting some of these viewer questions answered. If you guys have other questions you'd like answered in our next video, just leave them in the comment section below. I'll make sure to write them down. Thanks so much for being with us today. If you're not subscribed to the channel, McNallie Money, feel free to do so. If you're still watching at this point, hopefully you found some value. So make sure you hit the like button. That's all for now. Thanks so much and have a great rest of your day.